Sit back and relax. You're listening to episode 265 of the WealthTech Today podcast. And I'm your host, Greg Iskowitz, founder of Ezra Group Consulting. This podcast features interviews, news, and analysis on the trends and best practices all around wealth management technology. My guest for this episode was the one and only Adam Nash, CEO and founder of Daffy. Now, Daffy is a new FinTech platform focused on charitable giving. Nash has been influential in FinTech, most notably as a serial angel investor, advisor, board member, and executive in many companies, including Acorns, Gusto, Figma, Open Door, and many others. Adam and I, he's been on the podcast before. We bonded a little bit over our shared computer science degrees, although he went to Stanford, I went to Rutgers, so clearly a huge differential there. Adam has a really interesting career. His first job as a software engineer at Next, which was an innovative computer company founded by Steve Jobs and later acquired by Apple after Steve Jobs became their CEO. He then became a product manager for eBay. I mean, the names of the companies he worked for is just who's who of great fintechs. VP of product management at LinkedIn for 4 years. He then jumped over to Greylock Partners as an executive in residence. He went to Wealthfront in 2013. When Wealthfront had less than 100 million in AUM as their COO. He became their CEO in 2014, stayed through the end of 2016, then went to Dropbox. He was VP of growth, product and growth there for 2 years before founding Daffy finally in 2021. Whew, that's an incredible career. So Adam and I had a terrific conversation, and we talked about a bunch of things. Number one, a little bit of Daffy's story, a little bit of the background. I thought that was interesting. Technology advancements, their scalability, how they're offering custom portfolios, the flexibility of the platform, and then APIs and integrations, as well as something new they're coming out with for private stock donations. I thought that was also pretty cool. So you'll hear all of that in just a moment, but let me just do a couple of housekeeping tasks before we continue. Please subscribe to this show wherever you listen to podcasts so you don't miss an episode. Check out our sponsor, the Invest in Others Charitable Foundation. You can find them at investinothers.org. All right, let's kick this thing off. All right, I'm excited to introduce our next guest. It's industry icon, Adam Nash from Daffy. Adam, thanks for being here again.
Oh, great to be here. Thanks for having me again.
You're becoming a regular. Having you on the program once a year. You were here last year. This might become a regular thing for you.
It is the giving season, so I'm always happy to talk.
It's a great time of year. Where are you calling in from?
I'm actually at Daffy headquarters. It's in Los Altos, California, right by Stanford.
I love that location. I spend a lot of time in the Los Altos area. It's a beautiful place. A lot nicer than where I am in New Jersey. Although today it's like Los Altos weather. It's 72 degrees and sunny and no humidity, so I feel like I'm there.
There's something to be said for great weather in November. It's not something you can count on, but it's nice.
We'll have it for a couple of days, and then it'll be back to rainy and cold. So I'm trying to enjoy it. But if you can, let's just jump right in. Give us the 30-second elevator pitch for Daffy.
Daffy is a new modern platform for giving. We basically rebuilt the donor advised fund from the ground up using all modern FinTech technology. It's a very easy way. We charge a flat fee. So just for a few dollars a month, you get access to a platform that lets you put money or assets or investments aside for charity. They're invested tax-free in a range of portfolios. And then, of course, anytime you want to donate to any legal charity in the US, it's just a few taps on your phone. So very proud of our technology, very proud of the features we support and the innovation. But it's really been about opening up the donor advised fund to the millions and millions of American households who give money to charity every year.
Yeah, the last time we talked a lot about donor advised funds and how they fit with advisors' portfolios and why they should be using them. So now I wanted to dig a little deeper. I also want to talk about some new things you guys have coming that you just launched, but can we talk about the FinTech story behind Daffy?
Yeah, well, I think it's actually similar to a lot of other categories that we've seen in the last 10 to 15 years. I mean, we've seen an incredible burst in innovation in the last 15 years. For consumers, we've seen better technology and products to help them save better, spend better, invest better. for advisors, we've seen new platforms and technologies come up to make it easier to deliver high quality financial advice and manage the relationships with their clients. But the donor advised fund space, and I would say charitable giving, seemed left out, right? When my co-founder and I were looking 4 years ago at great financial products that had not been reinvented yet, the donor advised fund really stood out. It's still a world of mostly emails and PDFs. Even the big guys, Fidelity, Schwab, and Vanguard, it feels like their donor advised fund is left out of any of their technology improvements. And so we really felt that this was a big category and a place where using modern technology, not only could we do a better job for our members, for our customers, but also we could do it far less expensively. A lot of the donor advised funds on the market have very high minimums and very high fees. Even Vanguard, I love Vanguard, but Vanguard has a $25,000 minimum and charges 0.6%, which is a lot for a simple account type. And so we set out to use technology to do what technology does best. Take something that was a little bit rare and expensive and turn it into something ubiquitous and almost free.
Do you feel now that looking at starting a company versus even 5 years ago, that you can do a lot more with fewer people?
Oh, absolutely. There's no question, right? I don't think we could have built Daffy even 10 years ago. It means so much. It's not just the features people talk about, right? Like the fact that we don't have to do account linking ourselves, but we can depend on services like Plaid. For security and KYC, we can use companies like Sardine. When it comes to custodying assets, et cetera, there are platforms, not just Apex, but Coinbase for crypto, Atomic on security, et cetera. Even working with major institutions is easier. They almost all have FinTech groups. And so across the board, the fact that we could have an idea for something like Daffy, form a team, get all the regulatory approvals and launch it in just a matter of months is really a testament to the fact that these technologies have really opened up the market in ways that just wasn't possible a decade ago.
I was listening to one of my favorite podcasts, Jason Calacanis uh, from the startup podcast he runs, and he was talking about 10 years ago, you needed 100 people and $10 million to launch a scalable startup. Now you can do it with 10 people and $1 million, or even less.
Yeah, no, there's actually a lot of talk in the industry, and the AI boom is also occurring this of how long before we see the billion-dollar startup that was just done by one person
Mm-hmm.
or two people. The Daffy team is bigger than that, and we take our responsibilities pretty seriously. But it really is amazing the scalability. So, and we've seen this in other areas that technology has moved into, right? The way recruiters work now in a world with LinkedIn is very, very different than they worked 20 or 30 years ago when they were just processing kind of applications. And so I think as technology moves through sectors, you see that effect. And I definitely think that we're seeing that in FinTech.
One of the new features you have recently announced is custom portfolios. Why is that important, and why did you launch that?
Yeah, well, that's a great advantage. And so this has been one of the exciting features for our members and for advisors on our platform this year. We just launched it a few months ago. So when we launched Daffy, you had the ability to pick from about 15 pre-approved portfolios. We had standard portfolios, low-cost index funds, ESG portfolios, conservative portfolios with cash and bonds, and even native crypto portfolios for clients who really were looking for that. But in the end, it was a limited set of flexibility, and we were getting constant requests, particularly for folks with larger accounts and more significant giving strategies, and their advisors for more flexibility. And so we looked at the problem. Most donor advised funds almost look like mutual fund pools, right? They have large categories, but you can allocate percentages. But we said, hey, ETFs have come so far, the platforms have come so far, the technology. What if we just opened it up? What if we just approved a large set of high quality ETFs from the best vendors in the industry and gave advisors and members the flexibility to recommend portfolios with any percentage of up to 10 of those ETFs? And I know that sounds simple, but we ended up approving over 460 ETFs from 8 providers. I like to say, I am the engineer at heart. It's over 100 quintillion different options. So hopefully that's enough. It's a lot bigger than 15.
Yep.
But what's exciting is because different people have different giving strategies. There's some people who put money in every year and they send money out. There are some who are building up a fund so that they can give more in the future. And there's some people who are putting away enough money so that they can give reliably for the next 5 to 10 years. And so having that flexibility, not just for our members, but for the advisors of those members to customize their portfolios, it was one of the highest requested features. And I
Hmm.
like to think by rethinking that problem from the ground up with modern technology, we ended up with a solution that's highly differentiated and more flexible than almost any other donor advised fund I know of on the market.
And those portfolios, can the advisors rebalance them, trade them?
There's no trading involved. They're automatically rebalanced. So basically,
Mhm.
an advisor or member comes in, they recommend a portfolio of up to 10 ETFs, and they can specify the percentages down to 1% increments.
Mhm.
And then any remainder that hasn't been specified ends up in a ultra short bond fund, something that just
Mhm.
gets you kind of a low risk yield on an ongoing
Mhm.
basis. So a lot of flexibility, but it's a great platform. So for example, right after we launched custom portfolios, the Ethereum ETFs launched,
Mhm.
right? And it
Mhm.
turns out four of our pre-approved vendors had Ethereum ETFs. And so it took literally a matter of hours before we enabled those on the platform. Now, that's not the right investment for everyone or even
Mhm.
necessarily most clients. But what it meant is that for members who wanted that to be a part of their portfolio, maybe they already had a crypto allocation and they wanted to diversify it from all Bitcoin to
Mhm.
Bitcoin and Ethereum. But we were able to enable that just in a matter of, like I said, I think it was a day or two later.
Mhm.
And that's just for us, that's the kind of validation of what a flexible platform can provide. I mean, my joke is, I mean, Fidelity itself offers a Bitcoin ETF. I
Mhm.
still don't think you can use it though in their
Oh,
donor advised fund.
mhm.
But ironically, you can use the Fidelity ETFs with Daffy.
Nice. And can advisors make changes to those allocations whenever they want?
We limit portfolio changes to once every 30 days.
Mm, okay.
We don't people to use these as trading platforms. Giving is usually not that kind of investment strategy, right? Not that most people's giving tends to be methodical over time. But we do allow flexibility to change these things. And like I said, the portfolios are automatically rebalanced in software. So it's really
Mm.
a wonderful solution.
It sounds very convenient, I think, for most advisors. And when I am reporting on this, can I see the reporting with your top custodian? So I'm from Fidelity, Schwab, Pershing. I can see my DAF account also with my other held by holdings.
Well, DApps are a little bit different than normal financial accounts because the reason when you put assets into a donor advised fund, it's considered by the IRS an irrevocable donation, right? That's
Mm,
why you get the charitable deduction. So the assets are held in Daffy's name in Daffy accounts.
mm,
And we use Apex as our custodian. Also, we use a firm called Atomic, which is over BNY Pershing Mellon. But all the reporting on Daffy portfolios comes direct from Daffy. Advisors get
okay.
the ability to log into their account and see any of the clients that have
Mm.
added them on their Daffy account.
Right. So for a client, those assets are just a charitable gift that they've already given. How it's managed is not really their concern.
They can make recommendations, right? We let
Mm,
any member join Daffy. I mean, we don't know the giving plans of our different
mm,
members, like I said. And so we let them recommend what portfolio that they want their charitable donations to go into.
mm.
And then, assuming it's approved, we have 15 pre-approved portfolios. We just execute against those recommendations. So we try to provide all that visibility in the app and in the service. But it is a little bit different than holding a standard, individual retirement account or a taxable account.
An area I wanted to talk about, something we are very close to here at Ezra Group, is APIs and integrations. We are big proponents of expanding API capabilities, and you have an API platform at Daffy. Can you talk about that and how other fintechs or wealth management firms can access it?
Yeah, well, this is one of the exciting things that happens when you build off modern
Mhm.
technology from scratch. I
Mhm.
mean, most donor advised funds, most of the platforms out there don't offer any high level of technical integration, let alone modern APIs.
Mhm.
But we built Daffy from the ground up with this idea that all the incumbent platforms have donor advised funds captive, but none of the new entrants do, right? And
Mhm.
so we launched last year our API platform, and the API platform allows you to actually, with permission, right, if you get the key for a member, any donor advised fund account, to pull all sorts of data about that account, right, for reporting, but also execute actions on behalf of that account. And for our close partners, we actually let people open accounts and actually create contributions and intents. And so what we're really excited about in opening that platform is we think every financial platform should incorporate giving, right, and that ability as a strategy. And so we're excited. We've announced some partners on this platform. We'll continue to announce more, particularly this holiday season. But it seems like there's a real need in the market for a donor advised fund where you can integrate it with your existing planning tools and your execution platforms.
That would be cool if I could go into Money Guide or eMoney and see here's my plan for my financial life, and then also I can also see my donor advised fund as part of that.
Yeah, it's amazingly flexible. I mean, one of the demos we launched last year is actually a simple Slack bot, so
Mhm.
that a manager, you have engineers, you can give a reward. Anyone who squishes the most bugs this week can get $100 Gaffy gift, so they can donate the money to the charity of their choice. And we've enabled that through the APIs. So almost all the Daffy features are available via API. So really, the limit is really your use case and what you're trying to do with it.
The limitation is only in your mind, right? Excellent. Another feature you recently launched, Daffy launches innovative private stock donation programs for workplaces to unlock billions for charity. Why did you do that? It's obviously, I'm just teeing you up here for a really easy answer. And how has that changed your business? Did you see a huge influx? Obviously, where you are, there's lots of people with private stock. How did you get this going so fast?
Well, yeah, so we're always looking. So, the amazing thing about building the platform the way we did is we've been able to innovate so much more quickly than the existing industry, layering on features. We just talked about the API, we rolled out our family plan, custom portfolios, but I'm particularly excited about the private stock platform. And that's because in the last 20 years, since the bubble burst,
Mhm.
we've made it much harder and more expensive for companies to go public. And
Mhm.
that's okay. That was for good reasons. But we've gone down from about 8,000 public companies in the US to about 3,700. And the amount of wealth and the size of private companies has just ballooned. It's not just companies like SpaceX and Stripe, but our research indicated, CB Insights, that there's over $2.2 trillion in wealth in the stock of just the 600 or so unicorns that are US based venture backed. And there are hundreds of thousands of employees who work for these companies who are getting paid in stock. And so we saw that as a real problem. If you have trillions of dollars being locked up in private stock and that money can't make its way to
Mhm.
charity, that's
Mhm.
actually a problem for giving in general, for philanthropy in the country. And so what we did is we launched a platform and we partnered with a great company called Figma. It's one of the hottest companies in Silicon Valley right now.
Mhm.
And Figma right now is offering all their employees the ability to donate a percentage of their stock to charity by partnering with Daffy. And so we're excited about opening this entire area of giving. There are a few donor advised funds who have done this historically. But if you thought the minimums and fees for just a normal donor advised fund for high, the minimums around private stock, I've talked to donor advised funds where the minimum was $1 million or more. And we're excited about opening that up because we think that more and more people have private stock,
Mhm.
and the tax benefits of donating private stock are similar to the tax benefits of donating public stock or ETFs or even crypto. So we're just excited to add it to the platform and be a little bit of a forcing function for the industry to kind of recognize that private stock matters when you're figuring out what you do with your money.
Private stock matters. And how does this work? Because obviously it's private stock. So how do you verify that they've got it and that it's locked up now? How does it get transferred so they can't get to it? That they're making this irrevocable donation. It's private stock. So how do you handle that?
Well, that's right. And it really depends on the company. I mean, one of the great things about the public markets is that you have this standardization, not just for the companies on how they report, but how you can treat their stock. Private stock is different. Different companies can do different things. They can have different terms. And so when you're donating private stock, you have to actually look at the documents involved, and it helps tremendously to have the company be supportive. I mean, this is why we launched the platform by partnering with Figma. We're trying to set a tone for all the companies out there that this is a good thing you can do. It's good for employees. It's good for the company.
Mhm.
Um, but with private stock, you verify the ownership with the company. And in the end, a donation of private stock doesn't have to be complicated. They're
Mhm.
literally just transferring the stock ownership from one party, which is the person donating it, to the donor advised fund, which is Daffy Charitable Fund. And so it doesn't have to be difficult. In fact, by doing it as a program, we've made it easier for companies. And so I think that what you're going to see, you're seeing more and more companies do things like tender offers, more and more companies supporting secondary sales of private stock.
Hmm.
And this is a perfect complement to those programs because when you sell shares in private companies, just like anything other investment, there's taxes, right? And so
Oh
the
yeah.
ability to donate shares in the same year you sell some shares turns out to
Mhm.
be a way to not only save money on taxes, but have more money available for charity.
Hmm.
The only catch is that private stock is illiquid. And so until it's sold, you can't make donations to operating charities out of those funds. You have to wait until the stock is liquid. But what we've seen is that most people are fine with that. They
Yeah.
like the ability to give that donation in the year it makes sense for them
Right.
financially. And the fact that we'll hold the private stock until it's liquid and then that money will be available and invested to give to any operating charity seems to be a big win for most of the people we talk to.
Sounds like a win to me. So you have to basically partner with each private company individually, directly.
You don't have to partner to do a program like Figma is doing is something you want to partner with the company
Right.
for. But there's actually no reason you can't donate private stock from any high quality company. Now it gets more complicated. There are firms out there that specialize in more complicated things like you have a small business or a partnership and you
Hmm.
want to donate some partnership interest. That's not what we support currently. Right
Hmm.
now, we're supporting private stock donations from basically large established private companies
Hmm.
where there is an existing market for those shares.
Gotcha. So Figma's the first. You'll have others announced soon.
That's right.
We can just speculate as to what those might be. Other
Live
big public
update.
companies.
I remember when we launched crypto, we launched with support for Bitcoin, and we now support over 230 different crypto assets. So we'll expand that number quite rapidly. But what I'd recommend is if anyone's interested in donating private stock, either for themselves or for their clients, just use the form on the site and
Mhm.
submit it, and we'll follow up and let you know if we can do it.
There you go. And now you've led me into my next question so nicely. Thank you. Crypto, 230 crypto assets. Talk about how you added crypto support to the platform. Why did you do that? What technology are you using? What partners are you using to enable this? And what's the benefit?
Well, I always like to start with the mission before we get into the technical details. I mean, the
Mhm.
mission of Daffy is very simple. It's to help people be more generous more often. And
Mhm.
so when we launched, we said, well, there's a lot of people out there who believe in crypto. They've invested in
Mhm.
crypto. And whether they've made money or not, or whether that's a wise decision or not, they have those assets. I mean, at this point,
Mhm.
as of today, I think there's more than $2 trillion in crypto. And so once again, given our mission, we said, well, if people want to donate those assets to charity, let's make that easy to do. That's more money for charity, more money for good organizations and good
Mhm.
causes. And so thanks to modern technology, implementing crypto isn't that difficult. We actually launched in the App Store with the ability from day one to contribute crypto. We also launched on day one with native crypto portfolios who want to invest that way. We partnered with Coinbase, who
Mhm.
has fantastic facilities and APIs, and they actually even became an investor, right? So
Mhm.
Coinbase Ventures. And so basically, we support every crypto that Coinbase supports, which now is over 200
Yeah.
different crypto assets. And so using Daffy, whether you use the app or use Daffy.org, if you have crypto, like other property, if you've held it more than a year, donating it or contributing it to a donor advised fund has immense tax benefits, right? You get the
Mhm.
full charitable deduction for it, and you never pay the capital gains taxes. And actually, the truth is, we have a lot of members who like that idea because they don't love the idea of crypto taxes to begin with. And so the idea of using some of that crypto that's appreciated to not only get a tax deduction, but actually open up more money for charity is fantastic.
Mhm.
But I think our crypto support shows what the power is with
Right.
crypto in general. We're getting close to the end of the calendar year. People realize sometimes late that they need to make a donation for tax reasons.
Yep.
And the great thing about crypto is it never closes. It's not like the stock market. It's not just open
Yep.
Monday through Friday or 9 to 4. It's open 24/7 and we
Mhm.
see crypto contributions come in, sometimes significant ones, December 29th, December 30th, December 31st. But that's one of the things that technology lets you do, right? It's
Mhm.
available when you need it. It's it's
Yes.
it's it's on your schedule, not its own.
It never closes.
That's
It's on
right.
its own. So as we're wrapping up, what can we expect from Daffy in the next year? What's 2025 bringing? Do you have any things you can share about new features, functionality, partnerships?
Oh, well, I can't pre-announce things, but yes, you should continue to expect us to see more and more integrations and partnerships. We've been talking with a lot of firms. A lot of new platforms are realizing that integrating a donor advised fund into it is a benefit for their users, benefit for their advisors, and of course, makes their platform more attractive. So expect to see a lot of partnerships. I mean, we're already very proud of the product, but like
Mhm.
the innovation we push through is a lot of bringing the features that frankly we've come to expect from
Mhm.
other financial products into giving into the donor advised fund. And some of them are simple, some of them are more complicated. So, for example, our family plan was just the simple idea that so many people with giving wanted to add children or grandchildren or siblings or parents into their fund and their giving. Every tech product has a family plan. And yet no donor advised fund does. And so we're really enjoying also bringing features over from the technology world
Mhm.
into the donor advised fund space. And so expect to see a lot of investment in the core product and scalability because the numbers are getting big. We grew contributions in 2023 by 425%. And we think we're going to get even more contributions this year. So we probably will be spending a lot of time in 2025 also talking about what it means to have this platform really scale to support the trust that all of these advisors and all of these members are putting in us.
That would be fantastic. We want to see more growth. We want to see more success from companies like yours because it only encourages more innovation and more flexibility for advisors and for the families that they serve, because that's really what it's all about. So, Adam, thanks for being here. Where can people listening find out more about Daffy?
I mean, the easiest way to find out more about Daffy is just to go to the website. It's daffy.org, right? So easy to remember. We also have an app in the App Store. So if you want to play with it, it's not hard to go to the Apple App Store and type Daffy and come in. And starting can be very easy. If you already have a donor advised fund, we're actually listed in all existing donor advised funds as a place you can make grants to. So if you want to move a few $100s to Daffy to play with it, it takes just a few seconds. And in fact, we've built that into the site itself now. We partnered with a company called Chariot. And so now if you have a donor advised fund somewhere, you can come to Daffy, click a button, log in, pick an amount of money, move it over to Daffy to play with it. So I always encourage people to just try it. We've found that most people like having an app on their phone in their pocket that they can give anytime they want to give. And advisors are telling us that they like that ease of use too, because it turns out when clients can do these things themselves, they don't send you quite as many emails asking you to make donations on their behalf.
Indeed, advisors have more than enough to do
Yeah,
besides
that's
that.
right.
Great. Adam, thank you so much for being here. Really great seeing you again.
Of course, great to be here.
Hey, it's Craig again. Here are my top three takeaways from this episode. So, going top to bottom here, technology advancements. Adam was talking about some of the technology they're using at Daffy, such as Plaid for security and KYC, and other services that help them with custodial services for assets. He emphasized the ease of the need to form a team, getting regulatory approval, and launching this product quickly. And so we talked about custom portfolios and how they are offering that on Daffy. So when you make your donations, you can then put those assets into a custom portfolio. So it gives you more flexibility and more control over the assets as they grow before you donate them. They have a strong API platform and lots of integrations, which I think is, of course, super important, knowing how important Ezra Group is around integrations. They allow partners to open accounts, create contributions, and execute actions all through their APIs, which seems pretty beneficial. You can do this approach, these donor advised funds, sort of as a service through their headless API. And finally, we talked about private stock donations. They talked about the challenge of it. Of course, being in Silicon Valley, growing up there, Adam has a lot of connections, and there's tons of people who have become quite wealthy through private stock. So giving them the ability to partner with companies such as Figma and allow their employees to donate a percentage of their private stock to charity can only help everyone out. Well, there you go. You've heard it all here. Thanks for listening. But before you go, please head to our website, ezragroup.com, and scroll to the bottom of the homepage and sign up for our newsletter. Once a month, you receive an email chock full of wealth management goodness, news, information. You will not be disappointed. Thanks again for listening, and talk to you all again next time.